threshold of 150,000, so those remain in place. So less than 150,000 in receipts, there's no filing required. For those with receipts above 3 million, there's now an additional rate category. The 0.75 for services, as you saw before, 0.35% for retail trade, 0.25 for wholesale, and we've added a category, 0.15 for agriculture, forestry, and fishing. So that's a new component relative to the -1. And then the catch-all category, and this would include construction, manufacturing, is 0.48%. Now, one of the major changes in the -2 is the fact that the commercial activity tax is not implemented until 1/1 of 19. That's one of the biggest changes compared to the -1, which had a 1/1/18 start date. So this would go into effect 1/1/19. There would be a 50% credit for pass-throughs in 2019, the first year of implementation, and then that would drop to 25% in 2020. So remember that this is a credit that is taken at the entity level. So you would fill out estimate what your CAT liability is, and if you're a pass-through entity, then you would take the credit, and then you would net that out of your CAT liability at the entity level. The personal income rate structure has an additional bracket in it. Again, a change from the -1s. The 4.5% and 6.5% are the same. There's an 8.75% rate, which you saw in the -1, but now this bracket is truncated at 25,000 single, 50,000 joint. So you would have, as you go through the brackets from 16,000 to 50,000 for a joint filer, you'd have a marginal rate of 8.75. And then at that point, it would revert back to the current 9%. So you're creating a fifth bracket there in the middle, and then lowering the bottom two brackets. And then the 9 and 9.9 would stay in place. The 9, of course, would apply to less income than it does currently, and the 9.9 would have the same threshold as it does now. Another major change in the -2 is that there's a temporary corporate income tax rate increase that would be effective with the current corporate tax year. Remember, those corporate tax years are staggered. So it would be effective 1/1/17, and it's currently at 6.6% for the first million in net corporate income. That would be moved to 8%, and currently it's 7.6% for net corporate income above $1 million. That would go to 9%. So that would be the change from 6.6 to 8 and 7.6 to 9. Then, as in the -1, when the CAT goes into effect, then the corporate income tax is eliminated. So that would be removed. And of course, a lot of the language in it, just as in the -1, but a lot of the language you see in the amendment is repealing those, basically a full chapter of statute. And also what remains the same as the -1 is the repeal of the pass-through rate of 1/1/17. That's in a list of statutes that are repealed at the end. That's where that appears. So now if you look at the revenue on impact of this of the -2, the commercial activity tax goes into effect for the last 6 months of the biennium. So we're estimating you'll get about $539 million in gross revenue. The 50% CAT credit would apply,